Hey everybody, it's Jason here. It is Tuesday, November 2nd, 2021. Putting this one out a little bit later in the evening, so a lot of you are probably watching this on Wednesday. Either way, thank you for being here. Got a lot of financial economic news to get caught up on here, and we are truly living in some very, very interesting times here. And at any time, this whole pumped up economy, this bubble, this everything bubble, as many are calling it, can be undone and let to deflate. The problem is we have the banks that are bent on continuing the credit, continuing the borrowing, continuing the consumption, continuing the accumulation of debt, both individually, corporate, national, multinational, you name it. Just historic levels of debt just being accumulated throughout the world, not just the United States. And of course, here we look at many markets. We see the stock market hitting all-time highs, home prices new all-time high after new all-time high, way beyond the 2008 financial crisis housing bubble levels. The scary part is this could be just the beginning. They could keep on keeping on. They could keep on doing what they've done so far to make prices continue to rise. For example, they could issue another foreclosure moratorium where even if a lot of job losses hit the economy, a lot of people are leaving the labor force right now for lots of different reasons. They could put in another moratorium where no one can get their homes foreclosed. That would put a price, a floor under home prices, a price floor, right? So we don't know what type of intervention or what type of programs are going to be introduced, but definitely see some interesting things happening. Let's start with Zillow. What's happening with Zillow? Well, they were big into the home flipping. We reported on that over the years. Zillow even had an AI program that they used to figure out what the offers were going to be, what the returns going to be. Well, Zillow just laid off, fired, whatever we're going to call it, 25% of its workforce, and they're closing their home buying business. Now, for those that don't know, a lot of these institutions were going in and just outbidding everyone else for the homes, sometimes 20, 30, 40, 50,000 above the asking price. And we know that these corporations have access to tons of money at ultra low interest rates, right? So is this some sort of warning sign? So Zillow was not making enough on their investments to get a big enough return to keep this operation going. Otherwise, you wouldn't have seen them shut down their home flipping business and racking up such big losses. All right, quick excerpt here out of this article. Zillow has been one of droves of companies attempting to cash in on the new iBuying trend, the fad that sees banks, real estate companies, and other firms buying up houses en masse to capitalize on the red-hot housing market. The trend involves giant companies using algorithms and other high-tech tools to competitively bid for properties that they don't need, and that's helped to fuel skyrocketing home prices. In many cases, it made exceedingly hard for normal people to buy homes. Often, the companies try to purchase houses and then resell them at higher rates to home buyers or convert the houses into rental properties. All right, so just one of the several things that is pushing home prices higher, right? We have companies out there fix and flip, fix or purchase and rent it out. A lot of companies are doing both, where they're buying and holding and renting them out. Some of them they're flipping. But this has gotten to be an enormous part of the home buying process where 25% of homes now are scooped up by non-occupants, right? So people that are buying it for investment purposes in companies for the most part. All right, so is this some sort of writing on the wall with the housing market? You let me know. I don't think it's really going to be a turning point, but it could be something to keep an eye on. Now, remember, a big part of this home flipping is the cost of the upgrades, the cost of the materials. So when the cost of goods and materials are rising faster than home prices, it can make it very difficult to flip homes and still make a profit. Let's shift gears a little bit right here. Let's talk about the buybacks, the latest company to make huge gains after announcing buybacks. Bed Bath & Beyond stock soared 91% at one point after announcing a stock buyback. Now think about the labor shortage right now and think about what companies are doing, especially big companies. What are they doing with their profits? Are they using the profits to offer higher pay so they can get workers to actually come to work? Well, no, a lot of them are doing this. They're using the profits to buy back their own stock and inflate the price. And who makes the most money? The upper level executives and typically the people in the top 10% who own 90% of stocks. right? So all these companies complaining about a labor shortage, they can't find enough work. Look at all the companies that are doing stock buybacks. If they really wanted to attract workers, raise your wages instead of buying back so many stocks. But you see, in the system that we're in right now, when the people at the top, when they make enough money, ultimately they don't care if their company fails, right? So if you're the CEO and you're making 50, 60 million a year, after a few years, you've got $1 billion. At that point, you're so rich. Do you really care what happens to the company? And even if they did care, a lot of times the company is just going to get bailed out anyways. Look at the banks. The banks have been guaranteed never ending life support from the money machine. Guaranteed never ending life support. So why would the banks be careful with their loans? Why don't they just keep giving out loans? Because ultimately, at the end of the day, they're going to get rescued. Right. And speaking of banks, we do see that lending is continuing, even though debt is at all-time highs for consumers. Let's take a look at this next story. Hyundai now is the latest car maker to make it much, much easier for people to get loans. We reported just a week or two ago how Ford was dropping their credit score requirement. You don't have to have any credit score to qualify now for a loan. And typically it's going to be an 84-month loan because car prices are so high and so many people can't afford the payments. They have to keep stretching out these loans. Now Hyundai is joining in with Ford. Hyundai clears the way for riskier 84-month loans. Also, what Hyundai is doing is they're increasing their maximum advance rate to 130%. So what that's going to do is that's going to allow people to roll over negative equity from their previous car loan, and maybe they're trading in an older car, and they're going to get even more deeper in debt, and they're going to have negative equity in the car that they buy because they're rolling over existing debt, and now they can go up extra 30% above the actual vehicle price that they're buying. You see, everything's based on the monthly payment, the monthly payment. No one thinks about how much interest they're going to pay over time. A lot of people aren't even thinking about if the car is still going to be running after 84 months, right? That's 7 years, right? How far are these banks going to take this? Is it going to be you don't have to have any income at all? Is that next? You don't have to have any job, no income? Pretty soon they're going to start basing loans on stimulus checks. Hey, the government's going to send out more stimulus checks, so now we're going to make it easier for people to get loans because we know that the stimulus checks are going to be used to pay back the loans. You see where this is going, right? This is absolute twilight zone here. If some people really are not awake now to what's happening with this banking system, with this structure of money, right? So maybe this runaway inflation will be a good thing. Maybe it'll slap people in the face a little bit and make them wake up and start paying attention and to start finally figuring out, what's happening with this monetary structure and the way it's being used to basically enslave people in a lifetime of debt. We know that most people are in debt. About 75% of people, most people when they pass away are in some sort of debt. So many people don't have anything at the end of their days to pass along to their children. But the top 10% doing the stock buybacks and the ones closest to the money printers, they're doing just fine. And we're going to have to see some big, big changes here. And we're going to have to go through a very, very dark stretch, in my opinion, of this economic situation. You're going to see a lot of people get really hurt. And honestly, a lot of people may not even survive what's coming because this is an enormous manipulation. This entire economy, it's an illusion. It's fake. Call it what you will. If it were not for all the money printing, the money machine, life would look very, very different right now. And we're going to start seeing more things happening. It's interesting what's been happening here so far. The way things are changing right now, who knows what the world's going to look like in just a few months from now. What's going to happen? I mean, you let me know. It's more debt, easier loans, more buybacks, more money for the top 10%. Zillow, what's that indicating? Is it the writing on the wall for the housing market? Or is it just because the cost of materials and labor so high that flipping homes became more, made it difficult to turn a profit? You let me know. Thanks everybody for being here. Stay well, stay safe, keep stacking. Bye for now. Peace.